time. Oh, thank you, Justin. Louisa is not, I don't really recognize, it's not a name I recognize, I can't see a picture. So we might have a couple of first timers here. So that's good because this is a space for first timers. Let me introduce myself now that we're on record and everything, do you know what I mean? Let me introduce myself. Let me introduce what we're doing here today. So my name is Nate. Thanks for coming through. This is the Sunday study sessions. This is basically a place for people who are in this space who have joined P&T because we want to learn how to trade for ourselves. Yeah, that's what this space is. So, you know, P&T is it's a big company, tech company. B is a technology company. There's a lot of products. There's a lot of information. You know, you've got products like Shift. You've got products, you know, like MineHub. All of it helping you to trade without really spending too much time actually learning to trade, right? However, they also offer education where you can learn to trade. And for me, that was what attracted me to the company. Yeah, so I sort of think that while I had conversations with Carl, and I was like, this is a skill that I can learn, and I want to learn it, and I want to take it with me for you know, for the foreseeable future. I want to take it with me. Once I know this skill, I can never unlearn it. I'm going to be 8 years old, and I'm going to be in Kenya, and I'm going to know how to trade. Do you know what I'm saying? I'm going to know how to invest my money. I'm going to know how to make like a couple grand in 5 minutes. I'm going to know how to do that because I'm learning today in my 30s, right? So that's basically what this space is. This space is a study session. This is where we come to study regularly every single week, right? We're only going to be we only run through fundamentals in the study sessions because another part of the purpose of the study sessions is to inspire you to actually go and study deeper throughout the course of the week. So next week that's coming, I want you guys to basically, you know, watch the videos on WoW, you know, study the charts that you get on Sense. Do you know what I mean? Like, use the time that you've got to implement what you learn or what we study during these Sunday study sessions. I've framed them as study sessions because it's important that you guys know, it's important that I express that I am not a six-figure trader. I am not a diamond or a sapphire or a ruby network marketer. I am someone who has joined this space like you and wants to learn. Do you know what I mean? I'm someone who's joined this space. I wanted to learn. I jumped in. I was like, right, let's get my study on. I've been here since September, and I've learned a lot in that time. And basically, I just want to make the process of learning a lot quicker for some of you guys, especially those of you who are in here for the first time. This Sunday study session is for you. Yeah, it's for people who are here for the first time, or people who have maybe been here in the company for like less than a couple of months, you know, and you're not really. When I started, I jumped into WoW and I enjoyed WoW, but at the same time, it didn't. A lot of WoW didn't really click for me until I had like a conversation with Carl, and he opened doors. And I was like, okay, it makes a lot more sense. And now the whole game is brand new, right? So what I want to do is I want to do exactly that for new people that are coming in. I want to introduce consistency into the mix. So we're doing it every single Sunday. And we kind of got like a little rotor of topics that we study. Today, the focus is going to be on market structure. So we've done market structure before, and we will do market structure again. But again, we're only ever going to cover the basics of market structure. Let me cut this music off actually, because I forgot it was on because I got my headphones on, I couldn't even hear it. Okay, yeah. So yes, yeah, we're going to talk about the basics, the fundamentals of market structure. What is market structure? How can we use it to our advantage, basically? But because we do have some first timers in here, I'm going to try and be as beginner friendly as I can be. Okay, so if you guys have any questions, this is an interactive session. Okay, how many people have you got in here? I've got a couple more people come through, but still not too many. You know,
what's happening, Gal?
Come on, man, like Gary. Yeah.
Oh yeah. Anyone obviously post this in the groups and whatnot. Because I know there's going to be people who need to learn about trading, and then bam, this is your chance.
Yeah, agreed. Yeah, 100%. Obviously, if you've got any new starters as well, if you've got any people on your team, plug it. Do you know what I mean? Send them, tell them to come. Even if they come halfway through, they'll pick something up, just get them in the room, just send them a message and say, look, Sunday Study Sessions is live now. And especially those who've been to the Sunday Study Sessions before, they'll know that there's value here. Those who haven't come yet, you know, if you've come here, if you're paying to learn, then surely you're going to take every opportunity you get to learn. Yeah, this is a study session. This is an opportunity to learn. That's what this is. That's what we're doing here, right? We're learning and studying together. Okay, so I guess the first thing we need to discuss then is what is the market? So by this point, the majority of you should know what we are trading in is the foreign exchange market. I know we said we've had a couple of first times in here, so like I said, I'm going for beginner friendly. But what we're trading in is the foreign exchange market. So the foreign exchange market is basically the market that we use to measure the value of a currency against another currency. So for example, we're measuring the value of the pound when compared to the dollar, or we're measuring the value of the pound when compared to the euro, right? We're measuring the value of that currency. The value of that currency is measured in pips. So whereas €1 could be worth 85 pence, it would actually be 0.85123, yeah? And that is actually the amount of pips. So it would actually be 0.85123 pips. That is the unit of measurement. And then the market can rise to 0.85155 pips. Okay, so it's still 85 pence. €1 is still 85 pence, but the value has increased ever so slightly, right? And that is what we are measuring when we're watching the market. We're watching the value of one currency measured against another currency. The value raises or drops, and we measure that in pips. If you want to understand more about pips, then keep coming to the Sunday study sessions, because we do have like an hour-long study session which we focus specifically on pips and risk management. But today the focus is on market structure. So I'm kind of giving you like a general idea of what a pip is, a general idea of what the market is. Let me share my screen. Hold on, bear with me. No, I've done the wrong one. Share my screen. There you go. Okay. So we understand, first and foremost, we understand what the market is. The next thing I guess we need to understand, just the basic fundamentals of what is a candlestick. Okay, so is what the market is, or what the chart is made up of. The chart is made up of candlesticks. Let me show you a chart real quick, actually. Here we go. So look, the chart, if you zoom right in, the chart is made up of all different kinds of candlesticks, okay? Now, again, we're not going to do an in-depth study on candlesticks today, because today we are going to, focus on market structure. But look, if you remember what I said earlier, so €1 is worth 85 pence, but it's actually 0.85975. Those are the pips, okay? So these down here are the, the hundreds, tens, and units of the pips. So the market could move from 85975 to 85550, and the market has gone down X amount of pips. Yeah, the market has gone down this many pips, or the market has, continued to go up, and it went up by this many pips, right? And that is how we measure the market. So as you can see, each candlestick is within a range of pips, yeah? This candlestick is that big. This black candlestick is that big. Do you know what I mean? This white candlestick is that big. So the candlesticks are in between a range of pips, right? So the candlesticks, they essentially measure the pips based on the session that they represent, which in this instance is the daily. So each candlestick here represents 1 day. But again, like I said, we're not focused on candlesticks. I just want to show you some basics. So each candlestick gives us 5 pieces of information. The first piece of information is where price started. So we know that, for example, this being a white candlestick, we know that the direction of the candlestick, so the first piece of information is which direction the candle went in. If it is a black candlestick, then that means that price has gone down. If it's a white candlestick, it means price has gone up. Yeah. If it's a black candlestick, it means price has gone down. If it's a white candlestick, it means price has gone up. See it there? Simple as that, right? The other thing to mention is that obviously if we know that price has gone up in this instance, then we know it started at the bottom and we know it finished at the top. Yeah, so that's 2 more bits of information. We know where the price started and we know where the price finished, right? However, it tells us a bit more than that actually, because we've got these wicks here, right? And they also tell us how high and how low price went. So it started at the bottom, right? And then it went down to the bottom of the wick. Then it went all the way up to the top of the wick. Then it pulled down, and this is where price finished, and that is the candle, right? So we started here, then we went down a little bit, right? Then we changed our mind, so we've got a little wick there, and we've gone all the way up now, right? Then we changed our mind, and we've come down a little bit. So we've got the wick to show this is how high we went, this is how low we went, but this is where we started, and this is where we finished, okay? And the 5th bit of information is obviously the direction, right? So each candlestick has given us 5 pieces of information, helping us to understand the chart and to understand the chart and to understand what it is that we're looking at. Okay, brilliant. So market structure then, because that's kind of the main thing that we're here to talk about. Let me go to the monthly view, I guess, because it's not super deep. And I'm going to spin it sideways. Here we go. So market structure. What is market structure? Market structure is basically the market. The market is very volatile. As you can see, price is going up, down, up, down. You've got white candles, black candles everywhere. Up, down, up, down, up, down. Price is extremely volatile. However, there are certain times where the market is more predictable than others, right? And those are the times that we take advantage of in trading. Those are the times that we kind of wait for. We wait patiently for those times where the market is more predictable than the other times. And that is when we enter the market and place our trades, right? It's like, okay, I'm going to wait for it to hit this level. And as soon as it does, then I'm going to enter the market. So how can we tell where those times are? Well, it's quite simple. It's not easy, but it's quite simple. It's a simple case of if the market has respected a certain level in the past, then we can expect that the market will respect that same level in the future. It's not a guarantee, okay, but it is something that we can expect. So case in point, if we look at this, where this black line is here, right? If we look at this line going across here, we can see, I might zoom in a little bit. Oh, okay, that's not gonna work. Telling me I can't do both now. Of course I can. There you go. We can see that price touched this level here and it reacted immediately. It touched it again and it reacted immediately. It touched it again and it reacted. It touched it again, it's touched it again, it's touched it again, and it's touched it again. And every single time the market touches this level, including this one if you wanted to really, every single time the market touches this level, it reacts, okay? Now, as you can see, it's not an exact science. Sometimes it breaks out a tiny bit more, sometimes a tiny bit, you know, sometimes it doesn't quite touch the level, you know, it's not an exact science, okay? So we're looking at like an area, like a region, somewhere around about here, we know that the market is likely to reverse. So if price were to come back up right now, because we can see, for those of you who don't know, where this blue line is right now, this represents current price. Yeah, this is where price is right now. So right here is where price is currently. Okay, so if price were to go upwards and hit this red line, what would you expect? What would you anticipate? Well, if you're anything like me, I would say, well, every time it's hit that red line, it's bounced downwards. So I would be looking for an opportunity to place a sell. I'd be looking for an opportunity to place a sell, right? Now, the sell might not be that good. It might only come down to here, because if you look, you know, price has been bouncing off of this level as well, right? So the sell might not be a massive sell. It could only be a small sell, or it could be a massive sell. It really depends, right? Price could go all the way down. Price could go down, come back up, and then go down. Price could also break through this level, and then you've lost your trade. It's not that deep. It happens to everybody. Yeah, you're not going to win every single trade. You know, it's just the nature of the game, right? Price could break through the level, but what's important is that you are aware that the level exists. That's the thing. Yeah, that's what market structure is. Market structure is the structure that the market follows. The market respects certain levels, and market structure helps you to, or your awareness of what market structure is helps you to identify those levels. So sometimes it's not quite so obvious, but the more you look at it, the more you can see it. So for example, if you look at where the black line is now, again, if you look at this level here, you can see that price was climbing, then it's kind of shiggered around here a little bit, and then it's gone up, right? Let me just zoom it, clear that so you can see it again. Yeah, so you see around that level, and then look again, same level, same level, same level. Okay, so the point being that market structure dictates that if there is a certain level that the market has respected in the past, then the market will consider that level in the future. Yeah, that's what market structure is about. The market will consider that level in the future. Why is that? Well, ultimately, it's because you and I know that that's the case. You and I know the rules, right? So if you think of it like, let's go back to this level here, right? So if you think of it like this, if the market comes all the way up here, what am I going to do? I am going to press sell. What are you going to do? You are going to press sell. What is Justin going to do? Justin's going to press sell. What is Jeff going to do? Jeff is going to post a sell and shift, because everybody is expecting a sell right here. Okay, so because everyone is expecting a sell right here, loads of people are going to jump into the market and sell. And when they do that, that will devalue the value of the asset that, you know, that is being sold. It's being sold off. All the shares are being sold off. Yeah, why is that happening now? The value is now dropping. That's all that the chart is, right? The chart is reacting to people. Now, the market that we're in specifically, the foreign exchange market, it is heavily affected by the input of big spenders like the banks. Okay, so you know, your little £1 trade, £1 per pip, 50p per pip trade, you know, is not going to affect the market in any way, shape, or form. However, when all of us do the same thing, that will have a slight effect on the market. Yeah, and also if all the banks get involved, all the institutional traders, all the people up in Canary Wharf or in New York or wherever it is that you are, do you know what I mean? If all the people there, if all the stockbrokers all kind of jump in and start pressing sell at the same time, everyone's saying, okay, look, the value of the euro is dropping, let's all sell, right? Then the market will go down. Okay, if everybody believes that price is going to go up, like for example, what happened with Bitcoin. Everyone was like, Bitcoin right now, everyone was gassing about Bitcoin. Bitcoin's flown up. Yeah, now people are unsure. There's a little bit of fear, uncertainty, and doubt. And the value of Bitcoin is now dropping, right? Because loads of people are removing their money. They entered money, the price went up, and they've removed their money. So now the price is going back down. Some people are now pressing sell because they're thinking, okay, I think the chart's going to go down. So they're pressing sell, yeah? And now it's starting to look a little bit more chaotic That doesn't really happen as much, as far as I understand, with the foreign exchange market, because it's more regulated by the banks. The banks are in control of the market. Crypto is unregulated, so it's down to us to kind of figure it out and make money from it. But the banks are all over this, so they're kind of making sure that the value of the pound doesn't drop below a certain level if they can help it, or the value of the dollar doesn't change. Because obviously, if it does, then imagine if $1 became worth less than a Ghana cedi. Do you know what I'm saying, or whatever? Then America wouldn't want that to happen. Yeah, so they're going to try and drive the price of the dollar up as much as they can, so that they can remain a rich nation. Yeah, so they can remain. They can have all the money. The value of their currency is going to be up. That's what they're going for. So market structure. As soon as you see that the market has reached a level of structure that it is, that it generally reacts to, you can expect the market to react to that level again. The level at the top is called resistance. So price is on its way up, it meets resistance, and then that resistance forces it to come back down. Okay. The level that is at the bottom is called support. So price is falling, it's on its way down, it finds support, and the support helps it to climb back up. Okay, so we've got support and resistance. Yeah, so we've got support and resistance. So support is at the bottom, resistance is at the top. Now, there are tons of support and resistance lines. Okay, that's important for me to make sure that you guys are aware. And it's not just on one time frame as well. We'll get into time frames in a minute, but let me just zoom in a little bit so you can see what I'm talking about. So, okay, we can say that generally, this is a general resistance level, okay? But you could also, I guess, say that this right here is a resistance level, because if you notice, can I zoom in? No, I can't, I'm gonna have to clear this first. Okay, because if you notice, price touched this level, then came down, then came back up and touched it again, and then dropped. Yeah, so you could say, okay, it's touched this level twice in this time period. This that we're currently looking at is the monthly chart, just so you understand, just so you get the picture here. So each one of these candlesticks represents 1 month, okay? So in between this dotted line and this dotted line is a year. It's actually the year of 2018, okay? So we've got January, February, March, April, May, June, July, August, September, October, November, December. Okay, so we can see in August and December, we've hit the same level. Yeah, so price has come up to this resistance level, and it's dropped down. It's met resistance, and the resistance has forced it down until it found support. And the support level has helped it back up until it has met resistance. And the resistance level has knocked it down until it found support. And the support level has knocked it up until it met resistance. Yeah, do you understand? And literally, that is all the market will ever do, all day, every day, up, down, up, down, up, down, up, down. Now, obviously, we see certain levels of strong support and strong resistance, and that helps us to plan our trades, right? So, for example, let me stick with the example that we've been using this whole time. For example, I would say this is a level of strong support, yeah, of resistance, sorry. So if the market came up here, I would expect it to resist strongly. Why is it that €1 is not worth, okay, so think about it like this. If €1, if price were to go up here to this level here, then look on the right-hand side, €1 would be worth £1, okay? €1 would be worth £1. But right now, €1 is worth 85 pence. And maybe the British bank will try and drive price down so that €1 is worth 69 pence. You know, maybe we've been there before, yeah? Or maybe the European Union, because obviously Britain is no longer part of the EU. So maybe they'll try and drive price up so that they can match Britain, and €1 is worth £1. Who knows? Let's watch and find out. It's interesting, right? Honestly, who cares? Either way, you can make money from this chart. Either way, if price goes up, you make money. If price goes down, you make money. As long as you are sitting there paying attention, watching the chart, understanding what's happening, who cares what they do ultimately, really and truly? Shouldn't make too much of a difference. What is more important is that you understand how to take advantage of it, and how to empower yourself with that information, how to empower the people around you with that information. What can you do with that knowledge? If you are intelligent enough, if you are clued up enough to be able to have an educated guess as to what's going to happen with the pound dollar over the next couple of years, because remember, this is the monthly chart. So in between these dotted lines are years, are years. So this is 2020, this is 2021, right? So, if okay, over the next, say, 3 years, price should be going up to here, I think. Do you know what I mean? Then great. Then you can enter the market, you can jump in on a buy, you can jump in on another buy, you can jump in another buy. Price might come down again. You could, it might come back up. Whatever could happen, right? The market's extremely volatile. That's the thing. Market's extremely volatile. But the thing to note is that there are some times where the market is more predictable than others. That's the point of today's study. Yeah, we can see, okay, there are certain levels where if the market has respected them in the past, then we can expect the market to respect them again. Do you know what I mean? And that is the essence of market structure. So market structure, these support and resistance levels, they form patterns, right? Patterns that are quite common. Let's switch it out. Let's switch it out for now. Yeah, they form patterns. Hold on, sorry, my bad. Stop animation. There you go. Yeah, they form patterns. So, for example, there are 3 main stages of the market. There are 3 main stages that the market falls under. So first is trend. Everyone knows what a trend is. Yeah, when the market is trending. So for the market to trend, basically it needs to 1, 2, 3, 1, 2, 3. So let's say we are here right now. So the market to trend, it needs to go up, up, up. Yeah, or it needs to go down, down, down. Yeah, the market is trending. The market is going in a that's it. I've decided what I want to do. I am going this way, right? Outside of the trend, the next is called a range. So range means that the market goes up, down, up, down, up, down, up, but it stays within a range. It stays inside this range here. Yeah. It's not going out. It's not going out of this range. So it stays in this area. That is what a ranging price is. So ranging price, it could be, it could be smaller than that, but it stays in the range. Yeah. If it's trending, or if it can range and then break out into a trend. Yeah. So it started off as ranging and then it broke out into a trend. Right. So you've got range, you've got trend, and then lastly, you have consolidation. Yeah. Lastly, you got consolidation. So consolidation is kind of when the market's a bit more choppy. Do you know what I mean? It's not really, it doesn't know what it wants to do. The market is not going up, it's not going down, it's kind of just throwing a little tantrum. The market is in consolidation, sort of like flatline almost. Consolidation normally happens, from my understanding, at the bottom or the top of a trend or a range. So for example, when prices, let's say price is ranging, right, like this, right? If we zoom in on this bit right here, in fact, let's zoom in on the bottom one. If we zoom in on this bit right here, then price is coming down and then it hits the bottom and then it goes up. Yeah, price is coming down, it hits the bottom and then it goes back up. So this area right here is kind of like a bit of a consolidation area. It's like, okay, what am I about to do? Okay, I'm going this way. That is, you know, from my understanding, that is one of the ways that consolidation works. Okay, it's that price is on its way somewhere, it hits a level, it consolidates, it's figuring it out, it's kind of straightening out, it's balancing, it's getting its bearings, and then it goes in the direction that it wants to go once it's got its bearings. Okay, another way that it could go. Another way that it could work, for example, if price is trending, yeah, same. Price comes up here, bit of consolidation, and then it drops, right? So in my understanding, that's how consolidation works. Consolidation, ranging, trending. There was definitely something that I wanted to say. Oh, that was it. There you go. So a trend. A trend can do one of two things. Okay, a trend, let's say the market is trending. In fact, let me clean all of this off now. Let's say the market is trending and we get here, right? The market can do one of two things. It can either reverse or continue. Yeah, it can either reverse or it continue. So literally, the market can either go that way or the market can go that way, right? That's it. That's what the market has the option to do at this point now. Now that the market has made a move, it's made a move, it has the option to either reverse or continue. Or I guess it could now get stuck in a range. Do you know what I'm saying? But even, you know, that would count as something else, you know, but the market has the choice to do that. So when you see the market, let me do this again. Okay, yeah, let me do that again. So when you see the market going down, up, right here, right? What you're looking for is something to confirm what is the market going to do next, because this is a great entry point right here. Yeah, because if the market is trending downwards, then now, right now, you can expect the market's going to go down next, right? You can expect that. It might go up. It might be a reversal, right? It might be a reversal. But if it's trend, we're hoping it's a continuation, okay? And we're hoping that the market's not just going to consolidate and spin us out. That can happen as well. But, you know, right now, at this exact moment in time, we are expecting a continuation, perhaps. Why would we be expecting a continuation? Well, ultimately, it would be because of the candlestick patterns, right? So, you know, you would need to, as I said, study the candlesticks in order to really understand what candlestick pattern would indicate whether or not this was a reversal or a continuation. But the candlestick pattern will tell you, yeah? So if you are in this trend right here, and then you see, let me think, let's say you see is it a shooting star, which is this candlestick right here. Let's say you see this candlestick right here, yeah? That is an indication to me that the market is about to, you got that little candlestick there. That is an indication to me that the market is about to continue downwards. Yeah, that's what that says to me. So I'd be looking for an opportunity to sell as soon as I see that candle, right? Because for me, that is now an indicator that we are continuing this trend. So now I've entered the market here and I've caught all of these pips because I have ridden the trend. Alternatively, the market could reverse. So as I said earlier, once we get to this level here, I'm now looking for a candlestick pattern. And I'm expecting the market, this needs to be a strong support level. If this is a strong support level and I see a candlestick pattern that tells me that, you know, we're likely to get a reversal, then I'm going to be looking now for an opportunity to sell. Nothing is guaranteed, but at the same time, that's, you know, that's the nature of it. That is what support and resistance does. Support and resistance, like I said, the market is extremely volatile. It's extremely volatile, right? All support and resistance does, all market structure does, is it tells us there are certain times when the market is more predictable than others, and everybody is in on the secret. Everyone's watching those specific levels. Everyone's watching those specific levels and saying, okay, now's a great time for us to enter the market. Now's a great time for us to buy. Now's a great time for us to sell. You know, there's a lot going on in the markets. There's tons and tons of stuff happening. There are a lot of moving parts. It's not just because everybody presses buy that the market is going to go up, because another thing that affects the way that the market moves is the economy of the country that the chart is there to represent. So in this instance, we've got Euro GBP. As I mentioned earlier, if once Britain left the EU, that is going to affect the Euro GBP chart. No matter what, you know, people do, no matter how many people buy or how many people sell, it's going to affect the value of the euro, and it's going to affect the value of the pound. One thing you have to remember is that the euro is not only on this chart. The euro is on quite a few charts. The euro is on the Euro CAD, the Euro AED, the Euro Swiss franc. You know, the euro's on quite a few different charts, right? And the same for the pound. The pound is also on a couple of different charts, right? So it's not just that the euro and the pound are on this chart, and obviously if the euro goes up, the chart goes up. Yes, that is true, but obviously that's something that, you know, there are a lot of moving parts. You have to really bear that in mind, okay? Market structure is one of the biggest ones of those moving parts. Market structure is a massive moving part. You know, it's really, really good. The more you know, the more time you take to study and understand market structure, the easier it's going to be for you to understand how to place your own trades. Because obviously, right now, what we are waiting on, or what we're using, is of course the Shift app. Shift app is obviously calling the trades for us, which is brilliant. So we've got DMC here, for example. DMC is going to say, okay, entry at 197. I think that this trade is going to go all the way down to 196. So sell for 100 pips. Yeah, he's called that trade for you. It's giving you a 20 pip stop loss, and it's not something that you don't need to actually look at a chart at all, right? However, if like me, you know, this is something that you want to learn, this is a skill that you want to know, then market structure is something that you really have to understand, because it's very likely that DMC's decision took market structure into account. Yeah, it's almost guaranteed that before he placed the trade, he had a look at the market, the structure of the market, and said, okay, because we're about to approach this strong resistance level, I think now is a good time to place a sell, right? And look, the market has started going downwards. We're currently 53 pips on the way down. So, you know, he's obviously seen the opportunity. He's advised us, we've jumped in, and we're on the way down, which is brilliant. Range volatility, reversal, continuation, consolidation, patterns. I think I've covered most of the stuff I wanted to cover, actually. Yeah, the only other thing that I guess I want to say is something that I say every single week. But, you know, these Sunday study sessions, hopefully you guys are finding value in them. Hopefully, you know, this has been helpful. Hopefully you've kind of picked up something about market structure that, you know, you might not have known before today, or that even if you have seen the videos on WOW, it might not have hit the way it hit today. That's kind of what I'm going for, because sometimes it's easier to hear things from your peers. Sometimes it's easier to hear things from other people who are in a similar, you know, sometimes if you listen to a trader who speaks about trading all day, every day, then the first time you hear him speak, you're not really going to understand what he's saying, because he's got a lot of lingo that, you know, he's got like a lot of language Do you know what I'm saying? That you're like, okay, what is that? So it's good that you are here, because here, you're going to hear someone who is like you, someone who's come from outside. I'm very new to trading. I didn't know trading existed a couple of months ago. And everything that I have learned here, in these last couple of months. So now I'm in a position where I can share that with you and be like, okay, guys, no, this is what I know, this is what I understand, this is what I've got. And if nothing else, my only intention is to give you guys a running start. Do you know what I mean? That's literally it. I'm not here to teach you how to trade. I'm not here to help you guys be, any better at trading than I could be myself. Do you know what I'm saying? I'm just here to, help you guys get a bit of a running start. What I would recommend that you do is use the programs that you are paying for. So you see in the bottom right, it says, wow, okay. These Sunday study sessions, these are not part of the deal. These are not what we're paying for. This is something that I've decided to put together, of my own free will, just to give back, just to kind of help people the way that I was helped. Okay. But this is the point. This is what we're here to study. This is the information that we're paying for. So I would scroll right down, right down to the bottom. Navigation on the left, where it says educators. This is my favorite place to be. And then pick an educator, press watch. Okay, and this educator has a live session.
Yeah, I think you're muted.
Yeah, I can't hear you either.
Yo, Nate.
We can't hear you, mate.
Yo, Nate. That's so joke. He ain't gonna clock
Hi,
it.
bro. We can hear you.
Everyone write in the chat so you can see it pop up on your screen.
I don't know if he's going to be able
Okay.
to see it, but not in Zoom.
Course, he won't. One sec.
How did I end up on mute?
I have no idea how you ended up on mute.
How did I end up on mute? Okay, cool. Well, how much did you hear?
You cut off as soon as you clicked on Andreas, and then yeah, that was it.
Oh, okay. Oh, that's calm. That's not too bad. Thank you, Justin. Appreciate that, bro. Yeah. So basically, what I'm saying then is every single one of these educators has got tons and tons of content. Yeah. We're not paying. Sorry, that was me. We're not paying for Nate. This is not I don't run P&T. I'm not earning any money from P&T for doing this. Yeah. So it's important that you guys know that. It's important that you guys understand that this is not, as helpful as these are, this is not ever going to progress past absolute fundamentals, right? If you want to learn the ins and outs of trading, as I am learning them as well, then we are going to study on WOW. Yeah, WOW is where we are learning the deeper things of trading. Like we're learning about indicators. We're learning, loads of different candlestick types. Here, today's Sunday study session is about running through the fundamentals with new starters. So if you get any brand new starters, anyone who just started, anyone who's brand new to the game, and you want to invite them in for a Sunday study session, this is the place to bring them, because this, hopefully, I'll be able to explain to them in a way where it's like, okay, they just received this information. It's not too much. It's not too overwhelming. They're hearing it and they're like, okay, yeah, that makes sense. And at least they're kind of getting the picture. hopefully you guys have got the picture. Let me know. I'm finished now. So does anyone have any questions? Has anyone got anything that you guys want to ask on the subject of market structure before we wrap up for the day?
Yeah, man, appreciate that, brother. Thank you.
Yeah, love, King.
Appreciate your time, man. Definitely.
Brilliant. Thanks, Kingsley.
Yes, Nathan, thank you very much for your hard work every single week. You enlighten us with more and more gems. We're appreciative about that. And hopefully, I know that Mr. Salman Shahzad also receive information. I know he's a student, he's new, and he's doing his best to learn this craft as much as possible. As far as everybody else, I'm grateful that everybody take the time to see a different perspective of similar information that actually is more useful for us, for all of us. Thank you very much, Nate.
Thank you for your consistency in being in the chat as well. It's always good to see you here, man. Appreciate that. Thank you, Simon, as well. Thanks for coming through. Yeah, good to have you guys, man. If you guys have any questions, then you've got a team around you that's here to support you. You've got people around you that's here to help. So, feel free to just reach out, pop something in the group chat, speak to your uplines. And we're going to be here next Sunday. We're going to be here every Sunday studying together and developing and growing and improving so that we can be the richest trading company that there is. The richest trading team on road. That's basically what we're going for, guys. Yeah. So come on, man. There it is. Energy. Brilliant. All right, guys. Thanks for your time. I hope you all have a productive weekend. Oh, yes, sir. Who's that?
It's me, Eric.
Hi, Eric.
I just want to say thank you so much for the teachings you've been giving us. I mean, like you said, you are a student like us, and day in and day out, as busy as you may be, you try putting things together to make sure that you share with us, so that we can also know how to get stuff done. So I just want to say thank you, and then encourage you to do more. We're also learning from you. We hope that in no time, we'll probably be in the seat that you find yourself in, so that we can help share the ideas together and then make this movement a big one. Thank you so much. You are such a good guy. Thank you.
I appreciate that. I appreciate that a lot. Thank you. Thank you very much, man. Yeah, honestly, guys, the key to success is to keep educating yourself. So the fact that you are in this room, the fact that you are on this training shows that you already have the mindset. You're here to develop yourself. You're consistent with it. You're putting in work. You should thank yourself as well. Do you know what I mean? For being here, for having the mindset. There are, I think, something like, 600-700 people in the PNT group chat. How many people's in this room? We've got 12 people, man. Do you know what I mean? That want to come and that are here to study, that are here to, to learn, that are here to develop. So well done yourself on being one of them. Remember to be here as consistently as you can. And it's not Sunday study sessions, but just show up to any session. The Super Saturday. We've got another one at 6:30 today that Justin posted, with Jen,
5 and
which is looking interesting. 5 and 6:30. So many things that we can plug into. We're in this space. We might as well take advantage of it and plug into as much of it as we can. Do you know what I mean? So, yeah, guys, well done for being here. Well done for being in this space. Well done for helping the culture and the community by turning up to the Sunday study sessions. I'm grateful for you guys as well. Yeah, and another thing, the reason we choose Sundays is because the market is open tomorrow. Okay, so today I would strongly recommend that you do something that is going to benefit you for the remainder of the week. So even if it's pick a chart and look at that chart and study that chart today, okay, and then think, okay, I wonder what is this chart going to do next week, and then watch it all week. Just watch it. Jump in a trade if you want to. Only take shift trades if you want to. Whatever, do whatever you want. But pick one chart and watch that chart and analyze it, and try and keep your eye on that chart. And then next week, do the same thing again. Do it every single week. Do it every single Sunday. And yeah, before you know it, you'll really understand the way that the market is moving. Because if you're consistent with your education and you're consistent with your practice, then you will improve. You will be better than you were this time last month. There's not a question. Do you know what I mean? So just stick with it, guys. Yeah, and you might not be Jeff in a week. You know what I mean? But you're definitely going to be better than you were a week ago. So stick with it, keep at it, keep on it. And I'll see you guys next week, yeah?
Oh yeah, I
Peace,
want to say
family.
thanks. Yeah, one of my old members jumped on and he wants to join back just from being in this session. So yeah, I appreciate it.
Hey.
Love. Let's go, let's
Now we're
go.
talking. Come on. That's what's up, man. That's what I'm talking about. We're here to learn, yeah? We're here to learn. You get me?
Love that, love that.
Bro, we love to see it, bro. Good stuff. All right, guys. Have a good week, yeah?